All right, well, good evening, everybody, and welcome back to Walks in Wall Street. I trust all of you had a fantastic Friday. It is officially the beginning of, I guess you could call it the Halloween weekend. And it was a very, very strong close today on Wall Street. The S&P 500 closed at 3,901, closing above its 50-day moving average. Now, if we want to look at some key levels here, I would look at the 200-day. So the 200-day moving average on the S&P 500 sits at 4,100. Now, if you go to tradingview.com, which is my preferred charting software, it's completely free, by the way. If you pull up a weekly chart of the S&P 500, you'll notice right where we bottomed. We bottomed right at the 200-week moving average and then rallied pretty strongly off the lows, closing today at the dead high at 3,900. The Dow Jones Industrial Average also followed, closing at 32,861. Now, the Dow has been the strongest out of all the major indices, rallying not only above the 50-day moving average, but also managing to break above the 200-day moving average as well today. If we think about the lows, the Dow has now rallied 14% from the bottom. Again, you'll notice if you pull up a weekly chart of the Dow Jones Industrial Average, bounced right off that 200-week moving average and rallied about 14% from the lows. Now, the concerning indice, which is actually kind of funny because if you think back about all of 2020 and 2021, the NASDAQ 100 and the NASDAQ Composite were the two major indices that were outperforming everybody else. But usually what tends to outperform tends to severely underperform in the years ahead, and I think that's exactly what we're seeing because the S&P is above its 50, the Dow is above the 50, but the NASDAQ Composite closed at 11,102. That is below the 50-day moving average and well below the 200-week moving average also. So we're seeing the Dow, we're seeing the NASDAQ lag here a little bit, but I think that's normal if we take a look under the hood of the market, as I like to say, because a lot of the large cap tech stocks have been getting hammered, with the exception of Apple. Now, Apple pretty much saved the market. We talked about this last night. We did a complete deep dive analysis into Apple's earnings report. They absolutely crushed it, blew it out of the water, reporting EPS that beat analyst expectations of about $1.29. Wall Street was looking for $1.27, coming in on $90 billion worth of revenue. Now, here's the interesting thing, and we briefly touched on this last night, but I think I want to talk about it briefly again to bring it to the forefront because you'll see where I'm going with this later in the stream. But Tim Cook came on the earnings call and said that we had 8% revenue growth year over year. And that revenue growth should have been double digits if it wasn't for a strong dollar. Now, we've been reviewing the pains of a strong dollar. The Dixie actually has come down a little bit, but according to Tim Cook, due to there being a massive strong dollar, there was about a 600 basis point hit to revenue. So if the dollar was weak or if we had a normal environment where there wasn't so many foreign exchange fluctuations, Apple would have managed to pull off a double-digit revenue growth quarter. But tonight we're just going to do a quick stock market review. We're going to look for some key levels, and we're also going to talk about the importance of looking for new leadership as we emerge out of a potential bear market into maybe a short-term tradable rally here. Obviously, we did get a follow-through day last week, which is now still intact. But before we officially start the stream, let's see who we have in the chat. I'll say hello to all the viewers, and then we will get started. We're here on Madison Avenue, by the way, and I trust everybody had a good day at work. So I see Connie R, the one and only Tone Rick. I see Matt, British Gray. Google is here. Rozzy, Jeff says the GOAT walks once again. Good to see you, Jeff. Teresa Diaz is here. Welcome, Teresa. Rafed, I see JM2. Vinny Castellano, appreciate you, my friend. The ABX girl, Charlie Richardson, and 48. Good to see you, 48 from New Zealand. Let me adjust the camera here, and we will get started. Let me just close the window. We are inside the WeWork building. Let me get my backpack. You know, it's a cold one out tonight, so I have 2 jackets on, but I didn't bring the microphone. So hopefully for my sake and for yours, it's not windy. We'll see. Hey, War Walker is here. Good to see you, my friend. Says, don't jump, Tom. It's not worth it. Yeah, none of that stuff is going to be taking place tonight. Michael Claudius here says, I'm from England and I've saved up a few thousand, which I'm looking to invest. Hey, very cool. Well, I wish you all the best, my friend. We are in the WeWorks, but we are going to head down now. If the internet goes out, I'll see you guys on the other side. How about that? Appreciate you being here. Pizza Man says, thank you for the video, Tom, and East Coast. Good to see you. All right, here we are. We are now officially ground level. This is on the corner of Madison Avenue and East 31st Street. You know, I think we're gonna head down to the Village tonight. I sort of like that area. Clear night, but it is extremely cold, at least in comparison to last night. So I hope everybody's having a good Friday. I see sunshine after rain. Says hello, Tom, and everybody. War Walker says, are we walking the Manhattan Bridge tonight? You know what? Maybe we'll do that tomorrow. Maybe we'll do that tomorrow, and I'll tell you why.
I don't think there's...
Tomorrow I have to spend the majority of my day in Brooklyn. So we may even be starting the stream from Brooklyn, New York, and walking over the Manhattan Bridge back to the Manhattan side. So we'll see. I see Sweet Country living in Michigan. Welcome. Paulette says, stay safe, Tom. It looks like it's a cold night. Yeah, I mean, Paulette, I appreciate it. It is definitely a little bit chilly out. I am wearing 2 jackets. Western Mass Davis here says, another great week, Tom. We've made it. Yeah, I mean, much needed Friday. I think I'm going to take the weekend to sleep in and relax. Robert is here. But I wanted to ask you guys right off the bat. I see Ethan R. What's up, Ethan? Mr. Howard says, hey, Tom, welcome, everybody. Ryan Royal, good to see you. Happy Friday. Now, the Twitter deal is officially closed, and I wanted to know everybody's thoughts on it. Are you guys optimistic? I guess we'll cross. The cab's not paying attention. So I wanted to ask this. Here's the question. I wanted to know if you're optimistic for the future of the platform, and if you're optimistic for the future of social media in general. Because there was a lot of, I would say, mixed emotions on the subject as I was scrolling through Twitter. So much so that I had to mute some of the keywords. You guys know me, anytime something gets too hysterical, I should say, and like a little bit nuts, I sort of have to mute keywords so it doesn't waste my time. Now, one of the things, there's been a lot of reporters that have been staking out the headquarters, the Twitter headquarters in California, trying to get interviews with people that were unfortunately laid off or something like that. And it seems like much of the interviews were just trolls, like people that didn't even work at Twitter. So I think a lot of the news that is going to be coming out of this Twitter deal, especially as it relates to hearing from the employees, I think is going to be a lot of fake news. So I think I'm going to completely ignore all of that stuff for 2 weeks, and then hopefully a lot of the real stuff will rise to the top. Hey, Paulette, thank you so much for the $5 donation. I appreciate all of the support, and thanks for being here. But I'll quickly give you my take. I'm very optimistic on the Twitter deal. And I'll give you the reason why, maybe 2 minutes or less. I think we need to look at Elon Musk's track record. And his track record doesn't disappoint, right? His track record doesn't disappoint. I mean, he's proven himself as an engineer. I don't really like using the term CEO when I'm talking about Elon Musk. I usually like to use the term engineer or innovator. I think he's proven himself enough to say he could build companies from the ground up, make them very efficient, and build physical products and services that people like to use. You know, prime example, Tesla. I think between my demographic of all of the, I would say all my friends, colleagues that I work with, everybody wants a Tesla, right? I think Tesla is, I would say, more of an even brand name than, you know, Ford or GM. So I think just his track record alone, the ability to hire correctly. Now, I think that's a very, very underrated skill for a CEO or any real C-level player or a business owner, is the ability to hire right. You got to hire the right team of people, hire the appropriate people that are competent to get the task done. And the reason why I say that is because if you look back over the past couple years with Tesla, pretty much all of their major targets that they've set out to accomplish, they were able to do. And that just doesn't happen out of thin air. It happens because you're hiring the right people and you're creating the right environment to succeed at those particular tasks. So I'm optimistic about it. I think the first couple weeks, now that the deal is closed, you're going to see a lot of politicization of the deal. And I think it'd be best just to ignore that. That's going to die down in probably about a month or two. And then I think you're going to see material changes and the platform is going to be better for everybody. But that's just my take. My take doesn't mean much. So I want to know what you guys think. This is East 26th Street. We have beautiful Madison Square Park right here. We're going to be walking downtown tonight. The ABX girl says Ford Mustangs F-150 EVs are sold out and have waiting lists. Brevard County Real Estate says Tesla is a niche business. It will never be mainstream/volume. It will be gone in 5 years, says Brevard County Real Estate. Interesting thought there. The Dark Horse is all employees as severance, signed NDA. Abe Tao says the man will sleep on the floor and make his company work. Yeah, he definitely is a hard worker. You know, Tao, that reminds me of the old saying is, you never really want to bet against the entrepreneur. So I don't know, I tend to be an optimistic guy altogether, so we'll see. Prince Isis here says good evening all. Hope you're well. JR says Elon will make Twitter better and stop censorship on the platform. Well, I actually, contrary to a lot of people's opinions, let me just read Dan Zhang's comment first. Dan says, I feel like any companies that Elon Musk is involved with himself is a huge factor. I call it the Musk effect. Yeah, I mean, Dan, it's interesting you mentioned that. I mean, it's sort of like the old saying, you never really want to bet against those star players, like those star entrepreneurs, right? It's sort of like having a Kobe Bryant on your team. It's sort of like having LeBron James, right? Now, I will say this, contrary to popular opinion, I actually think Twitter's a pretty good platform right now. I think you guys know my thoughts on that. I think over Facebook, and really any of the other social media platforms, I really wouldn't loop YouTube in there. But I think Twitter provides its users the most value. And here's the reason why I believe that, is because there's character limits. You can't just write a whole diatribe of nonsense. It sort of makes you think about what you're going to tweet out to the world. And it's actually easy to connect as like a business tool. Now, this is going to sound crazy, but over the past few years, I would say probably 2 years, I have made more notable business contacts over Twitter than I have on LinkedIn. I'm serious. That may sound crazy, but in my view, I've been able to connect with some, high-level money managers, some really, really A-class tech salespeople, all over Twitter, because for some reason, it feels, let me just try to not get hit. But if for some reason it feels like over Twitter, people are more open to talk and spread ideas. And there's a lot of niche markets within Twitter. If anybody's been on like financial Twitter, all the money managers, anybody really interested in finance is pretty much sharing all of their equity research. Oh, beautiful dog. Love those German Shepherds. There's almost like specific niche markets on Twitter. Whether it's real estate Twitter, whether it's financial Twitter. Those are the main two that I play in, but I think it provides the viewer more value than sucks value and wastes the viewer's time. Like some of the other platforms that I've stopped using, such as Facebook. Brevard County Real Estate is if he allows DT on, the advertisers walk. Oh, Donald Trump. Yeah, I mean, I don't know what he's gonna do with that. John is here, says, hey, how is everybody tonight? I'm doing good, John. Thank you for joining. I appreciate it. Celeste Stahl says, hey, Tom, have a good walk. Thank you so much. Sandra Nunez says, hello, welcome. Patrick, New York. Thank you for being a great moderator, Patrick. We are crossing over Madison Avenue in East 23rd Street. Monkey Man Productions says, Elon Musk, if you took the top 20 richest people in the world, All right, check this out, guys. This is a view straight up Madison Avenue. And you're seeing One Vanderbilt to your right. But check out the awesome view you got of the Empire State Building. Fantastic. Wayne McKay says Meta should have outbid Elon for Twitter and have made Twitter part of the metaverse. Interesting thought there. Deborah says everyone likes the smell of Musk, all success. Prince Ice says, I don't know how the Twitter user base is in the United States. At least in Korea, Twitter leans towards a manic, nerdy minority activist users. I think that's an important part of the analysis, is Prince Ice. That's interesting. I never really thought about that. So the way I use Twitter personally is solely on financial Twitter. It's only like it's pretty much like its own world, actually. You know, there's a lot of major money managers, major hedge fund managers, and top economists that are willing to share their ideas for free on Twitter, and they'll actually reply back to you, which is the crazy thing. I've had conversations with money managers that are running multi-billion-dollar funds just because Twitter is that sort of platform where it's an ease of use and it limits you to a certain amount of characters, right? So it's not like Facebook where you're writing like a whole diatribe of nonsense. It sort of makes you think. And for that aspect, when I talk about value to the person, you know, I think there are some, without naming them, but I will, like, oh my God, I think that guy got hit by the car. Jeez. Did anybody see that? Wow, he's a brave guy, man. Jeez, that guy is a rock. That guy's bones are made of freaking steel. Did you guys see that? That's a tough guy right there. That is a tough dude. Wow. Yeah, I kind of forget what I was saying. All right, segue to the beautiful view of the Empire State Building. We're standing right outside of the Flatiron Building tonight. Hey, JR's joining, good to see you. Double Eagle says Twitter is for people with zero impulse control. It's interesting, it seems like we have about 75% of the viewer base that doesn't really like Twitter at all. Interesting. Steamship TV, I believe they are. Ramadan Sal says, hello, I'm watching from Sierra Leone. It is my dream to live in New York City. Well, hopefully that dream comes true for you very soon, my friend. We'd love to have you in New York. Dan Zhang says, Tom, have you thought about doing a stream on the top of One Vanderbilt? I actually haven't thought about it, but now I am thinking about it. Maybe we will do that. Dan, have you been to the observation deck at One Vanderbilt? Yeah, I know. Matt says, glad that dude is okay. I mean, this guy's man of steel, man. Ryan Royal says, I mainly use Twitter for news, but a lot of people I follow are threatening to leave. I think it's a premature reaction. Yeah, so I sort of like to classify these things as sort of like a fog of war, right? Whenever you have something major that happens, I call it people becoming hysterical. So people become extremely emotionally charged and very, very hysterical. And during those particular times, I sort of like to take the back seat and just not really pay attention for about 2 to 3 weeks. Because after 2 to 3 weeks, I can almost guarantee that everything's gonna settle back to normal. The company, a lot of the activists aren't really gonna be talking about it anymore. And people are just gonna go back to work and try to make the platform better. Look, at least that's what I hope. I find it that Twitter is the one platform out there where you can easily connect with somebody that is very smart, very educated, intelligent, and capable, where you could build a network, and you'd be surprised with what you could do. Hey, Brad's Brain says, guess who's back on Twitter today and following Tom once again? That's right, Brad's Brain Twit. Good to see you, Brad's Brain. I appreciate it, my friend, and happy Friday. Mimi says, hey Tom, I only use Twitter to follow many macroeconomists or financial analysts I like. Yeah, exactly. That's exactly how I use the platform. And I think I don't think people sort of get how valuable that is, right? Because if you think about when my parents were growing up, right? Graduating college, you didn't have access to all these brilliant and smart people. Literally, you could roll out of bed, pick up Twitter, and tweet at a major economist that is always on CNBC, or a major professor that's teaching at the top business schools. And you'd be surprised. These people will interact and engage with you. So I see huge value in that. But one of the things I wanted to briefly cover tonight as we walk down Broadway, wow, these floodlights are incredibly bright. I think they're doing some major road work here. One thing I will give a very big compliment to the city on, the city has been doing a great job of paving all the roads. Now, obviously before, the potholes were horrible, but if you see here, it looks like they're gonna pave every single road in the city. Now, if you go south of 14th Street, they've already almost done everything there. And I think they've done a really good job. Hey, Deborah S., sometimes things just worked for the better as a whole. Good to see you. Roy S. Midtown East is very busy and packed tonight. Yeah, I could imagine. It's Halloween. I guess we can consider it the Halloween weekend, right? Major Halloween weekend, a lot of people out, a lot of people hanging out in the city. Now, we had a big rally day on Wall Street and also a big rally week. And this week was extremely, extremely volatile because we had all of the major, I would say the most important tech companies reporting earnings. And we covered it right here on the stream. We talked about Apple, we talked about Amazon, Microsoft, Alphabet and the like, Meta. And I think by far, and I think we could all pretty much agree with this, I think by far Apple was the standout. And I think it needed to be the standout for this rally to be sustained. We talked about this last night. Apple makes up about 7% of the entire S&P 500, right? The S&P is a market capitalization weighted indice, and Apple has the largest market cap in the S&P 500, making up 7% weighting. So could you imagine if Apple bombed on earnings, sort of like how Amazon bombed? You know, you could be, seeing S&P, especially S&P futures last night, being limit down. But Apple actually reported a fantastic quarter, I would describe it as, given the economic uncertainty and the economic environment. Dealing with record inflation, not only in the United States, but globally. dealing with some of the strongest dollar environments we've ever had in many, many years here in the United States. Now, if you look at the Dixie, or the dollar index alone, the Dixie, which helped out this stock market rally, fell almost all week, starting on Monday, started at 112. Now, if you noticed on Wednesday, it was the major day for the dollar. We slammed through the 50-day moving average, which is a very bearish signal. Now, I'm not going to call a top on the dollar, but I'm definitely calling an intermediate term top, which I think will help this equities rally. So we are now trading below the 50-day moving average on the Dixie. And I believe as of today's close, I think the Dixie is sitting at 110. Now, it got down as low as 109, but I think right now we closed the week at 110. Let's cross here and I'll take you guys through 14th Street, Union Square, and maybe we'll even check out Washington Square Park since it's the holiday weekend, Halloween. There's usually a lot of crazy stuff going on at Washington Square Park, so we'll see. Hey, Andy S is here, says, hey, what's up, y'all? Good to see you, Andy. Jay says, are you a trader? I manage my own money. What about you? Mike C says, it's funny how a plus 5% week can make you feel richer. Yeah, I mean, it's definitely a notable rally, right? Now, Friday of last week is when we got the follow-through day, right? And so this follow-through day maintains in play until we close below the low of the follow-through day. So I think the two main things that have fueled this rally so far that is good for equities is a weaker dollar and also a lower 10-year US Treasury yield. Now, the bond market has been getting a bid here for once after it seems like endless weeks of getting pounded. It seems like every single night when we turn on the stream, I'm like, oh, the 10-year US Treasury yield was higher today. Oh, the 10-year US Treasury yield ripped higher again. But we've finally been coming down. And I think last night, when we were doing the stream, the 10-year US Treasury yield actually broke below 4%, trading at 3.99%. But I think right now we rallied back above to 4%. Can anybody look at that maybe in real time if you go to cnbc.com/bonds? If you scroll down to the 10-year US Treasury, I think we are at 4% again, but well off the highs, well off the highs, which again has fueled this equity rally. Abdullah is here, good to see you. Welcome. Always appreciate it. Okay, this is 16th Street. The wind's starting to pick up. Let me know if you guys could hear the wind in the mic. Andrew H says, hey Tom, what is your expectation on the next rate hike? I think it's a good question, Andrew. So I'll give you my take on the next two rate hikes. So next week is when the Federal Reserve will meet once again at their November 1, November 2 meeting. Now, I can't believe I'm even saying that because it seems like it was just summer like 2 days ago, but now it's already November. Wild. Anyway, I think we're going to get a 75 basis point rate hike in November, and I also think we're going to get another 75 basis point rate hike in December. Now, I always whenever I put out an opinion, I always try to make a thesis where my opinion would be wrong. And I'll go ahead and say that right now. I think we could potentially, I think the Fed may do a soft pivot, maybe, just due to the fact that the Bank of Canada surprised everybody this week when they came out and only raised interest rates by 50 basis points. But I still think if I had to make a prediction, a firm prediction, I would stand by the fact that we're probably going to get two consecutive 75 basis point hikes. But what about you? What do you think? Austin City Limits is like, I'm glad the 10-year is down a bit. A lot of Halloween costumes already, and it's only Friday. The city is going to be wild this weekend, I can tell. W Delta's is 10 years showing 4%. It was 4% even. Thank you for that. Prince Ice's Apple products are selling strong even in this harsh environment. To think of currency overseas. Yeah, you're right. You're right. Sam Oliver says a pullback on light volume would be good. It would be good. Indeed, it would. Aaron Fraser says, I've been an option trader for over 10 years. Love that. Julio says, Tom, or Halloween weekend, what was your costume as a kid? I was always a soccer player. Like, is anybody, you guys probably aren't going to know who this is. But when I was a little kid, like Landon Donovan, maybe Kobe Jones were my favorite 2 soccer players, but you guys probably don't know who they are. Speaking of Amazon, we are outside the Whole Foods market here. Amazon owns Whole Foods. Now, we did a massive deep dive into Amazon's earnings report, but I think it's appropriate just to give my broad-based opinion on the major negatives of the report. Now, here was where I was concerned. And even though their Amazon AWS unit accounted for all of their profitability, so if we talk about operating income, the only profitable segment of Amazon came from AWS. And you guys sort of know this, we talk about it all the time on the stream. But I was really disturbed by the margin compression on AWS. And that's exactly what I didn't want to see. Because if you think about the 3 largest cloud computing providers, I would say it's Amazon AWS, Microsoft Azure, and Google's Google Cloud. Out of all of those 3, Amazon grew at the slowest pace. So AWS grew the slowest, which is a concern. And jeez, these people are nuts, man. All right, quick New York City pro tip. Never get into any sort of road rage incidents. Road rage is not worth it, my friends. So yeah, that was my main concerns, I would say, from Amazon's report. You never really want to see margin compression, and that's why I was also extremely impressed with Apple when they reported, because due to supply chain COGS, higher than normal inflation, and what it appears to be waning consumer demand, Apple was actually able to beat Wall Street expectations in relation to gross margin, and didn't really see too much margin compression at all. They actually saw margins grow a little bit. I think 42% gross margins. So Apple was definitely the standout there for sure. Hey, Gregory is here. What's up? Gregory, welcome. 5 says, I interned at Apple. How'd you like it? And what sort of department did you intern in? Now, Apple freaking took people's faces off today, rallying 7%. 7%. I think the S&P closed up like 2.5% today. Hey, Steamship is here. Says, lovely walk tonight, all things considered. Yeah, it's a beautiful night out here in New York. It's a little bit cold though. A little cold, but not to worry. I got 2 jackets on. Everybody's all upset, honking and banging and clanging around. The Austin Tennis is, Tom, how do you stay optimistic in sales in today's current economic situation where customers are facing huge budget concerns? I think it's just because I've been through it before. I've been in sales about going on 8 years now. Now, in the grand scheme of things, it's not a long time. But I'll also say this. And it may sound a little bit off-putting, but I got very lucky. And I'll tell you why. Because inadvertently almost, I sort of carved out a niche for myself. And when I got into tech sales, originally I wasn't put on some sort of a special teams, right? We weren't focused into selling into the investment banks. We weren't focused into selling into healthcare or anything like that. But I sort of looked at the marketplace and I'm like, where do I think there's going to be the most growth over the next, I'd say, 5 to 10 years specifically? And to me, that was healthcare, especially in home healthcare. So it's almost as if a lot of my existing customers, like major hospital chains, major home healthcare organizations, their spending is relatively stable. And a lot of the technology projects they roll out, the deployment schedule is almost a couple of years, right? And that has to do with multiple things, such as when their wireline contracts become up for renewal. So over the last, I'd say 5 years, hold on one second. So over the last 5 years, I sort of got lucky by picking the right vertical, developing those relationships and staying with those customers very, very closely. And I've been on like this 5-year rollout phase with many large, again, home healthcare agencies, hospital chains, where it seems like every single year they're rolling out a major project, right? A couple of years ago, we did the whole Epic rollout. So like all the hospitals' EMR software, where we provided devices that were locked down with like a Microsoft Intune or some other MDM. We automatically remotely pushed all of their necessary applications to these devices, and we provided the failover solutions. Now they're looking to do remote patient monitoring solutions and different IoTs. So it's sort of like we've caught them at a very, I guess, lucky time where it seems as if healthcare innovation is growing, and it's not like I'm selling into maybe a different industry that is more vulnerable to economic downturns than others. So that's sort of what I'll say. I think if you can get industry specific, make sure you're selling into a specific vertical that has exponential growth and is not too, I would say, is not too cyclical. So I know I'm rambling on, but I'll give you one example because I've also dealt with this in my career. Public sector or SLED tends to be very cyclical, right? It also can be very lucrative. I told you guys the story about the massive amount of spending state, local governments, education systems did during COVID, bridging the digital divide, buying literally hundreds of thousands worth of Chromebooks, connected laptops. So that was probably like 5 years of pull forward on tech spend into 2020 and 2022. So if you were selling any type of software or hardware or worked at a telecom company in 2020 or 2021, selling into the SLED, state, local government, education, you probably cleaned up shop and you probably had a record year. But now this year, you're probably having one of the worst years you ever had. So Mark Francis 076 says remote healthcare is coming big time. Yeah, and I'm working on deploying a lot of those solutions as it relates to remote patient monitoring, and it's really excited about it. It seems like there's more horn honking tonight in New York City. Have you guys noticed that? More horn honking tonight than any other night? But Austin city limits, what I would do, since I think you're maybe newer to tech sales, you just gotta keep after it, dude. It's a grind at first, but if you're starting off as an account executive, you want to scratch and claw your way to an enterprise position, okay? Because large enterprise businesses tend to have bigger budgets, well capitalized. So with some of my customers, yeah, our budget's getting slashed for next year, next fiscal year, absolutely. But what I'm saying is a lot of my hospital customers and home healthcare customers tend to not be feeling as much of an impact from the IT spend side of the house. All right, let's try to turn right. Maybe we can get away from some of the road rage here. Yeah, Vinny Castellano from Staten Island. People are angry tonight. Excuse me. Maybe it's just, the Halloween. Everybody wants to get to where they got to go. Who knows? But Vinny, please extend my regards to Maria Castellano as well. Tell her I said hello. and I hope she has a fantastic weekend. Hey, Sam Morongo is here. What's up, Sam? The Austin Tennis is Tom. Will you be attending the AWS event in Vegas this year? I'm not. I will not be attending that. But I would if I could, but unfortunately I cannot. But I should be in Vegas later this year. Should be. All right, team, we are now headed towards Washington Square Park here. But Austin city limits, any insight on what you're seeing? I know, I think you may be an account executive. Are you starting to see customers sort of pull back on their technology spend, or sort of what are you hearing in the field? And anybody else too. Amelia J says, people seemed angrier in general. Yeah, maybe. Good to see you, Amelia. Paulette, Tom, they are driving nuts with those horns. Yeah. Agreed. Vonda Howard, what's up? Good to see you. Ryan Beck. This is New York City Horror Night tonight. So we are now going to be walking towards the NYU Stern building. Every time we walk past this building, we think about Professor DeMonaran, who is considered the dean of valuation on Wall Street. I wanted to sort of make one point on the stream. And this is coming from Twitter, because I always check Twitter to see what other traders and analysts are saying. And it seems like a lot of people are trying to bottom fish here in some of the major names like Amazon and Meta. And I'm going to explain why that may be a mistake. And again, key term maybe here. This is Washington Place. If we continue to walk here across Green Street, you're going to see Washington Square Park. So we're going to get there, but we're going to walk around because I want to show you guys the front of the Stern building here at NYU. So if you notice, Amazon got hammered after earnings. They were down about 20%. But did anybody notice what happened to Amazon right as they were doing their conference call? The stock started to rally off the bottom quite materially. Now, I think we closed at the high of the day as it relates to Amazon, but still down big. I think the stock is still down like 12%. I think at one point, Amazon got all the way down to 98 bucks. So we broke $100, but we rallied back intraday to 103. But it seems like a lot of traders and a lot of analysts are trying to bottom fish some of these big tech names and also enterprise software names like Salesforce and the like. But I just want to point out, we've had a massive bear market. I mean, this is not just a run-of-the-mill bear market. This has been very severe. I mean, you have some individual stocks that are quite literally down 80 to 90%, quite literally. And usually when you have a massive washout like that, and stocks crack below their 200-week, which is like a major moving average, in order for a new bull market to sustain, it's usually led by a completely different set of leaders. Hold on one second, I'm getting... All right, the stream may buffer for like 30 seconds because this guy is going to relentlessly hammer my phone and call me for about on and off like 30 seconds. So if we buffer, just know it's because I'm getting an incoming call. But if you look back throughout history, there's always new leadership that leads in a new bull market, right? And for now, what I'm seeing, unfortunately, because I hate trading biotech stocks, and I hate, just in general, I've never been successful with biotech, but I'm seeing a lot of interesting, innovative biotech names as we walk through Washington Square Park start to break out and reach their 52-week highs. And these are usually the type of stocks that lead in a new bull market. Now, I'll quickly tell you why I've never really been successful trading very high growth biotechnology stocks. And it comes from the fact that I'm just not an expert, and I know very, very little about new drugs that are going to be put out, FDA approvals. Ooh, so many rats. Are you guys seeing that? Yeah, it's one thing about Washington Square Park. You'll always have massive amount of rats. So the problem with biotechs is you could have a company that is very late stage in their clinical trials, and they may only have one drug in the pipeline, right? So who's to say, and how can you predict, right? Unless you're maybe a biomedical engineer and you have some experience, how do you know that the FDA is not going to approve or deny that drug, right? It doesn't matter how well the clinical trials are going. I've seen it many, many times where a biotech is trading at 52-week highs, the news is great, and then all of a sudden you wake up on news that the FDA denied the drug, and the stock craters literally 90% overnight, because that is literally their only revenue source. So that is sort of why I'm a little bit queasy about, and well, not happy about, the fact that a lot of these biotechs seem to be leading in this next cycle, because I've just never been good at it. That's not my wheelhouse, and I'm not one to say, oh, is this drug going to be better than the next? How's the R&D into this drug? And also another thing I like to add, as we look at the beautiful Washington Square Park fountain here, is that you never really know, or is that a lot of the times these biotech stocks will be pre-revenue or have very little revenue, because their entire business model is predicated on the fact that this drug is going to be approved or denied. So I've seen it many, many times where these biotechs, they're trading great, there's a lot of institutional sponsorship, and then overnight, off of an FDA denial, the thing crashes 90%, and investors are left holding the bag. So Mimi says biotech is tricky with lawsuits and patent expirations. Yeah, it's just very complicated. And you guys know, my wheelhouse is more along the lines of enterprise software and SaaS in general. But it seems like at least the main group, the main leader, tends to be healthcare and biotech, at least for now. You can see all the way down to the World Trade Center. It's such a clear night. Over the past couple nights in New York, it's been really, really rainy and nasty, but tonight's actually pretty nice. Shmi says Amazon is no more growth. Amazon makes the transition to value. Yeah, I mean, you may be right. Now, there's a really good book, and I have to trying to remember what the name of it is. You guys got to give me a minute. Robert says, do I like SAP? So I will say this: if you're looking to break into tech sales or enterprise software sales, I think the top 3 companies that you should look to work for that'll give you good exit opportunities is SAP, Oracle. It was SAP and Oracle. Now, those 2 companies are a big grind to work at first, but it's sort of like if you get your foot in the door at a big name like an SAP or an Oracle, and you take 2 years and you go through the grind, you go through the ringer, you could probably exit to a really good, fast-paced SaaS startup, get some equity, and get a very good compensation plan. So I think for companies like SAP or Oracle, would I want to be a lifer at those companies and work there? Probably not. But if you can handle the 2-year grind as an Oracle sales rep or sales at SAP, you're going to have some pretty good opportunities, and you probably will not have a problem being employed. I sort of compare it to like some of my friends that are investment bankers, right? They're like, look, I'm going to do the 2-year grind at Goldman as an investment banker, because yes, I'm going to work 100 hours a week, but I'm going to learn a lot, and I'm going to get so many opportunities for exit opportunities, whether I could work in private equity, venture capital, or something like that. So I think those would be my thoughts there. Maybe if anybody here is maybe have worked for those companies or in those industries could provide some clarity on that, or insights. Hey, Van is here. Good to see you. Hey, the FDNY is joining the chat. Papa Smurf OG says, good evening, Tom. It's a chilly 53 degrees tonight in New York City. It is. I'm cold tonight. Good thing I brought 2 jackets when I left the house. Okay, good coffee shop alert here, Thompson Street and West 3rd. This is a very, very good coffee shop. Ryan Beck says, I think that ideology is lost amongst a lot of younger generations, Tom. Very wise. Yeah, I mean, I guess, Ryan, the way I think about it is, you know, is it a grind and is it tough? It is. It's tough. But, I mean, I don't even remember when I was 23 anymore. And I'm only 27, but I don't even remember really what I was even doing. Yeah, I was going to work every day. I was going to the office. But I'm glad I worked a crazy amount of hours then. Hey, Brian is here. Good to see you, Brian. Welcome. Cristiano, we got you. Good to see you. So this is sort of like the college town here of NYU. Okay, so the Papa Smurf says, Tom, I was off this weekend since I worked last weekend. I will spend some time with my children instead. Love that. Well, God bless you, my friend. Please have a good weekend. Gary Carpenter says, greeting from CN. Greetings to you. Oh, this is that custom chess shop we were looking past. I wonder how many dedicated chess shops there are. This one's actually pretty cool. Big fan of chess. Yeah, Ryan Beck, that's true. Says, I hate to generalize, but the quote-unquote grind is not what they are about, but you have to rub your nose in the dirt a bit before you're truly ready to excel at the next level. Yeah, and I think just in general, sort of the last thing I'll say on sort of like, I guess just speaking from experience, just coming out of college, working in tech sales, you know, I don't think you should be looking for work-life balance when you're really young, because that is the time where you have the energy to afford to be working all the time, right? So if you work really hard in your 20s, yeah, that's when you could put in 80 hours a week and build a network. So when you're in your 30s and 40s, you know, maybe you're a director level, maybe you're an associate at a bank, or maybe, you know, you start your own company in general, right? And you have those connections and opportunities from when you did work 80 hours a week. So now you don't have to work 80 hours a week. So I think I just suck it up, do it, put in the 80 hours, build your network, and it's going to pay dividends later for sure. This is called the Malt House. Interesting outdoor dining setup here. Hey, Billy says, I'm getting out of real estate. Honestly, just want a stress-free job, making pizza or something for a while. Good to see you, Billy.
Oh, bye.
Oops. Yeah. Well, I hope you, hopefully you get what you want, my friend. JR says, I know a guy who survived sleeping under his desk for 2 years on Wall Street and is now a multi-millionaire investment banker. Wow. That sort of reminds me of Elon Musk sleeping in the Tesla factory, right? Now, you know something crazy about Elon Musk? Because we were talking about, so for those of you who are just joining, we were briefly talking about the Twitter deal that closed. And, you know, respectfully, there was a lot of mixed opinions in the chat. I'm very optimistic about the deal. but it seems like half the chat is not in favor of the deal or thinks Elon Musk is going to make it worse, which I respectfully disagree with, but I understand where they're coming from. I think Elon Musk is going to do a great job. I think Twitter is going to become a behemoth. But you know what is so crazy about Elon Musk? This guy, quite literally the wealthiest man alive, he's been literally seen sleeping in the factory on couches. And it seems as if that Elon Musk appreciates and admires the innovation more so than just racking up a number behind his net worth. Does anybody sort of get that same I'm trying to think, I guess vibe from Elon Musk? And it's so strange because it seems as if these really, really high octane entrepreneurs that build unbelievable businesses, it seems as if they're all that way, right? It seems as if they are just all gung-ho about building a product or a service, and they don't really have a fear of failure because money doesn't really mean too much to them. They're like, I don't really care if I lose everything, but at least I'm just pursuing trying to build Tesla. At least I'm trying to pursue to build SpaceX or Starlink or any of the million other ones the guys got going on. And I think that fearlessness is what you need to really rip the world's face off. And I think very few people have it. I know I don't have it. But yeah, I don't know. That's just one of my thoughts from him. Yeah, Mimi, why was he carrying a sink into the Twitter headquarters? I saw that too. Yeah, Tariq Khan says Elon is an engineer. I really think people like that just care about the innovation, right? All right, we are now crossing West Broadway. Beautiful night out. Andre Almar, good to see you. Trust you're well. Mark Francis 076 says Google Elon's father. He has some things to say about his son. Maybe I'll do it if I can find the time this weekend. Double Eagle says I got the sense that Elon's brain runs at Mach 10, 24 hours a day. It's a blessing and the curse at the same time. Yeah, I mean, we'll see. I'm trying to figure out where we should go. Maybe we'll walk over to Chinatown tonight. We'll see. Maybe the Little Italy area. I think that'd be interesting to sort of check out.
And he was like,
the rally car says, hey buddy, hope all's well in New York. Yeah, everything is going good. It's a little bit of a chilly night, but a nice night nonetheless. Oh, look at this place. What does this say? $65. I guess not bad. I think it just opened. I've never seen it. I always walk past here. Naomi Cox is very optimistic about Twitter. Musk will probably expand Twitter beyond what anybody ever thought possible. Yeah, I mean, that's what I think. But, you know, the last thing I'll sort of say about that, which I think is important to say about it, it seems like people are very... It's almost like they feel bad for the CEO and the CFO of Twitter. But I think they're going to walk away with like $65 million each. So I think they'll be fine. You know, the severance packages are going to be massive. So I don't think I would really find a need to worry about it. I think everything's going to be fine. Now, the media is going to paint it up to be all hysterical. But I think once that dies down, we should be good. You know, I saw a lot of the CNBC people posting like just these fake interviews with obviously people that were just trying to troll them. I think one of the guys' last names was Ligma. I'm like, dudes, can you guys not tell that you're being trolled? It's like, you got to do a little bit more vetting, but it seems as if we live in a world where the media just wants to be first to put something out and cause hysteria. It's like, all right, these guys obviously aren't Twitter employees, and you're taking their word for it, so. Wow, that's an awesome shot of the One World Trade Center. Look at that. This is right on the corner of Prince Street in Worcester. This place looks like a very high upscale dog store or something. Hey, Julie M is here. Good to see you. Yeah, Ryan Beck was like Ligman and Johnson. That was great. Yeah, I mean, it's like it's obvious that they're getting trolled, but you could sort of tell on the reporters' faces that were standing right outside the Twitter headquarters. It's almost like they were chomping at the bit just to try to get a story and have somebody say bad about, talk bad about the deal. But I don't know, that's media for you. Who knows? I wanted to point out one thing. Did anybody notice the action in the VIX this week? Now, it's probably no surprise that this market rallied hard this week, because we had the key three things at play, right? We had a weaker dollar. Now, the Dixie did top out last week. I think it was on Friday was the official, I would say, intermediate term top in the Dixie. Well, let me sort of center the picture here to give you guys a better shot of this. But the Dixie fell almost all week, starting on Monday at 112, breaking below the 50-day moving average, and on Wednesday it got down to a low of 109. I think now the Dixie rallied a little bit, but retesting or backtesting the 50-day moving average at 110. And the Dixie hit a high on September 28th at 114. So it's been over a month now that the Dixie hit an all-time record high, and we haven't even retested that high, which leads me to believe that we could be in at least an intermediate term topping pattern here for the Dixie, which would be stock market positive. Mark Francis 076, thank you so much for the $5 donation. You're way too kind. This is Show Walks of Wall Street. Some love. Thank you so much, Mark Francis. I appreciate it. And I hope you have a wonderful, wonderful weekend. All right, before I go on, this has to be the most fancy scaffolding I have ever seen in my life here in New York. They literally have fans in the scaffolding. I mean, this is classic SOHO for you. Oh, it's outside of a Chanel store. That's probably why. But would you guys agree that this is probably the most sophisticated scaffolding we've probably ever walked past? So you go from fancy scaffolding, and I think it's heated under here too. It feels nice, to the nonsense scaffolding. Well, we are in high rent district here down in SOHO. But the second thing we talked about, that 10-year U.S. Treasury yield coming down. But the third thing is the VIX. I mean, the VIX has absolutely collapsed. Now, the VIX has crashed all the way down to 25. I think the exact amount is 25.75. And that is major, major stock market positive. But many people are like, look, earnings came out iffy. I would say the worst out of the bunch was Amazon. That got hit hard. But what really saved the S&P today was Apple, rallying 7%. I think the S&P 500 closed at the dead high too. Double Down says he is the new owner of Twitter. Let that sink in. As he carries the sink into the building, get it? Oh, that's hilarious. You think that was the pun intended? Who knows? Oh, you know what? So the Real, this store, I think is actually, now I could be mixing this up with something else because I'm not a big fashion guy, but I think this is a very high-end thrift store. Is that correct? Let me see. I think the Real is actually a publicly traded company too. I think, can anybody confirm or deny that actually? Oh, Ryan, it is? Yeah, I think that's such a unique idea, right? So a thrift store for luxury goods. Now, as we've been talking about on the podcast / stream, whatever you want to call it, there's a bull market in luxury right now. We just reviewed the earnings report of LVMH, and they knocked it out of the park, up double digits in almost every single category. We also talked about Hermes. Sales were, I think, up 15% in almost every single category. And they're going through and raising prices of all their bags about 10 to 15% for next year because the demand is so high. So it seems like the luxury market is actually holding up quite well. Okay, as Julia M says, they have many commercials on TV. Ryan Royal says, yeah, it's a high-end resale house. Yeah, very unique idea for sure. All right, team, we're coming up on Broome Street. Oh, that dog has boots on. Very cool. Now, one of the things I like about SOHO are all these very unique buildings here, and many of which have scaffolding, or excuse me, fire escapes on the outside, which once we cross the street here, I'll show you guys exactly what I'm talking about. Yeah, like these three, check these out. Could you imagine living in one of these lofts in SOHO? Now, I always said if I had the money, I think number one, it'd probably be living on Billionaires Row. But I think my second choice would probably be down here, maybe living in an entire loft. I think it just, this place has a lot of character here. You know what, let's cross here on Wooster, and then we could go over to Canal Street. Hey, Daryl is here. This is good evening, Tom from Chicago. What's up, Daryl? Roberts is way cooler to live in SOHO. Yeah, it's unique, but here's the one thing though. I love Central Park. I mean, Central Park is probably one of my favorite things in the city. So the closer to Central Park, the better. Now, here's something interesting for those of you who may be a little bit new to the live stream. So we actually usually start off these streams on 57th Street, Billionaires Row. And I always showcase the Central Park Tower. Well, the top 3 floors of Central Park Tower is actually on sale right now for $250 million. Sold by none only than Ryan Serhant right here. This is his office. I believe this is his brand new office, by the way. Team Serhant. And I believe they're one of the most successful real estate sales teams in New York City. And their office is located right here on the corner of Broome Street. In a very nice neighborhood, next to a very nice dog as well. Hey, Kerry Wallen is here. Hey, Kerry. But if you keep going down here, you'll reach the Holland Tunnel, where it'll lead you right into New Jersey. So usually during rush hour, this entire street is packed, slam packed to the rafters here. Hector H, good to see you. Michael Joseph says that property in the 80s was all commercial, and now it rents co-ops and lofts. It must have gone up at least 20%. Wow. Yeah, I could imagine. All right, so I'm gonna cross and go over to Broome, just so you guys can see the new office. And it's next to a very, very upscale restaurant too. Just so you guys could see who is in charge of actually selling the Central Park Tower, the triplex. Well, let's see which one they're advertising. So this one is 24 West 10th Street. It's a townhome in Greenwich Village for $28 million. And what is this one? 2 to 5 bedrooms from 1.675 million to 10 million. You know, that one looks like it's actually in Brooklyn, New York. So it's gonna have a really nice view of Lower Manhattan. But here are the main double doors into the office of Sirhan. And then right next door is a very, very upscale and very, very sought after restaurant. But we're gonna push on and go down to Canal Street. And we're actually gonna be walking all the way over to Chinatown and Little Italy, because I think Little Italy is probably going to be packed tonight. There's probably going to be a lot of interesting stuff going on. But I just wanted to show you guys the, I guess you can consider it, real estate firm that is in charge of selling, or that has the listing of Central Park Tower. Double Eagles is what's the name of the restaurant? I'm not too sure. If you go on Google Maps and you look up the exact address we were, it'll probably tell you, but it doesn't have a sign or anything there. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We do these financial walks and talks about 5 days a week between New York City and Miami, and we'd love to have you along for the ride here. Andre's office is Cipriani. No, I don't think it's Cipriani. I'm almost positive it isn't that, but that's also another really nice place. Look at this outdoor dining shelter here called Little Ways. The dark horse is, Tom, can you please get some crispy duck? I actually can, and I'll tell you why, because that's exactly what I ate today. I went to, I'll give you guys a good recommendation. Right on the south side of Madison Square Park is a place called Dim Sum Sam. Very good. I went there today for dinner before I started the stream. So if you're in New York City near Madison Square Park, I'd recommend it. It's not too bad too. It's quite affordable. You know, usually you go to some of these dim sum places, you could walk out paying like 50, 60 bucks. This place is quite affordable. It's good. Dan Zhang says, Tom, have you ever tried Peking duck before? I have not. What is that? What is that, Dan? Could you describe the dish? Oh, is it really Cipriani? Oh, maybe it is. I don't know. Hey, Manny Explorers. What's up, dude? Happy Friday. Always a pleasure to see you. Manny Explorers is a fellow streamer here in New York. Faith Finds Fashion says, love this stroll and your commentary. Thank you, Faith. Appreciate it. You know, I want to show you guys another unique building. I think I may have shown you this one before. But look at the windows. Now, I can't tell if these are like mini balconies and how far the windows open, but very unique nonetheless. And the doors, I believe, are like this solid, heavy oak wood to even get in the place. But once we get to the corner here on Canal Street, you'll be able to see the one and only One World Trade Center, or the Freedom Tower as they call it. Connor says, hello everybody from Nebraska. Just recently discovered the channel, and although most info is over my head, I teach elementary school. I enjoy the content and keep it up. Hey, well, thank you so much. We appreciate it. Thank you for being here. Wow, Nebraska. So what's the weather like over there? It must be freezing. It's freezing here in New York. So this is the very top of One World Trade Center. Looks like it's all lit up tonight for something. Not too sure. I think the Empire State Building was lit up last night for Brazil. But we are now in Canal Street. So the interesting thing about Canal is it runs across the entire island of Manhattan. So this will take you all the way to the tunnel where you can go to New Jersey, or if you continue to drive all the way down Canal Street, you'll hit right into Chinatown as well as Little Italy. And that's exactly the direction we're gonna take tonight. We'll walk to Mulberry Street and then we'll do that loop and come back up. Ooh, the wind is brutal. All right, let's cross. Yeah, war walkers like prison escapee. Yeah, it seems like everybody is out here for Halloween. Okay, so Nebraska isn't too unbearably cold. All right. Michael Joseph says, as he walked across the Brooklyn Bridge on any streams we have. So we usually walk across the Manhattan Bridge, as well as the Brooklyn Bridge. You know, on tomorrow night's stream, we may be walking across the Manhattan Bridge. I have to spend the most of my day tomorrow in Brooklyn anyway, so it looks like we'll be down there. But you know, one thing I wanted to mention before I forget is this week we were absolutely slammed with very, very negative housing data. But I want to quickly show you guys these buildings here. These are some of my favorite looking buildings here on Canal. Could you imagine owning an entire loft here? Very unique style. Some of them have all graffiti all over them. Some people would say you don't like the look, but I think it looks very unique and very New York. Very, very New York here. But we've been getting absolutely hammered with what I would say is unfavorable housing data. And that is exactly because the 30-year fixed rate mortgage is right now, according to bankrate.com, sitting at 7.32%. So 2 weeks ago, we heard from the National Association of Realtors as they released their existing home sales data. But then we actually heard from the new home sales data from the Census Bureau, and all of them were down materially. So we're seeing sales transactions dry up here. Now, do you know what was actually the bright spot? Now, I really shouldn't say bright spot because the sales transactions are still falling off a cliff, but I would say prices are still extremely, extremely elevated. Does anybody want to take a guess? Well, maybe that's too broad, so I'll just tell you. Long Island, New York, which is a suburb of New York City. You could think about Nassau or Suffolk County. Does anybody want to take a guess? And this was in the data that was just released today. Does anybody want to take a guess at the median home price on Long Island, New York? I'll give you a hint. It hit a record high today. So the median home price on Long Island, so that includes Nassau, Suffolk County, and they exclude the Hamptons because they don't want to skew the data, because everybody knows that if you want to buy a home in the Hamptons, it's going to be, you know, $100 million. So does anybody want to take a guess at what it would be? Okay, I'm seeing 800,000, 400, 750, 700. Photos from New York says 800. Andres Alpha says $1 million. Oh my God. Running at altitude, close. I think running at altitude almost hit the nail on the head. All right, I'm just gonna give it to running at altitude because that was a hell of a guess, man. The median home price on Long Island hit a record of $620,000 in Q3. Think about that for a minute. Now, some of you may be saying, that's not so bad. That's not so bad, $620,000 for a single family home on Long Island. Well, I'll tell you why it is bad. Now, being a native Long Islander myself, and I was actually looking to purchase a piece of property like a duplex on Long Island, and one of the only reasons why I didn't is because of the property taxes. And let me tell you, in most towns on Long Island, okay, if you were to buy a home that's $620,000, it's probably going to come with at least a $15,000 to $20,000 property tax bill a year. Now, I don't know if there's any town on Long Island where you could buy a home for $620 to $650 and pay less than, 15 grand for your property taxes. So I don't really understand how these people, I don't know how these people do it. Some of my neighbors in Massapequa, Lindenhurst, it's not uncommon to see $30,000 property tax bills annually. And, as somebody who would only buy real estate for cash flowing investment properties, I would say, wouldn't just the property taxes erode all of your equity in 20 years? I don't know. It just seems like it's too crazy. And now that all these property valuations have gone up, well, property taxes are going to go up even more. So, Ryan Beck says, Tom, no big HOAs like New York City, so maybe that helps offset. True. But I will say some communities in like Garden City, these gated communities, they do have HOA fees. American Vlogs is $8,000 monthly income, and still you will be on a tight budget in Long Island. Yeah, for sure. It's just crazy. It's wild. All right, team, this is Lafayette Street as we walk down Canal Street. Now remember, we are headed towards the east. So east side would be heading literally towards Long Island. So we're gonna be heading into the Manhattan Bridge. Hey, Crazy Otto, what's up, man? Long time no see. So Chicago's the same way, reasonable house prices, but sky-high property taxes. Yeah, I mean, I think Texas is also pretty bad with the property taxes. Hey, Remy is here. What's up, dude? Says bought a house to flip it in Woodmere. Elderly woman's husband passed. She couldn't afford the taxes. I'm glad you brought that up because that's a huge problem on Long Island. And I would assume New Jersey as well. Because even with, now there's something in New York called like the star benefit. So even with all of your tax exemptions as a senior citizen, if you think about it, if you're living on a fixed income, right? Let's say if you're getting Social Security and you still have a $4,000 to $5,000 property tax bill a year, that's pushing lifelong New Yorkers and lifelong Long Islanders out of their homes, and they're almost forced to sell just because of the property taxes. It's almost a little bit disturbing, honestly. Now, here's what I propose. And I think it's the right thing to do. I think once you hit retirement age, you shouldn't have to pay property taxes anymore on your primary residence. Let's say if you're a big real estate investor, you own multiple properties, and yeah, you still pay property taxes on them. But I do not think it's right to stress out our senior citizens and almost force them to move out of their homes that they've paid off just because they're living on a fixed income and they can't afford the property taxes. I just don't think that's ethical, but I don't know. That's just my take. JR says Florida has a tax break for the elderly. If you do the homesteading, right? Is that correct? So JR, how does that work? Maybe you want to type it in for the chat. if you homestead in Florida and you're a senior citizen, right, you don't have to pay. Ryan Beck says, I think there are safeguards for senior citizens in Texas. Golden's Dawn says, so true, Tom, very unethical. Hey, Bottomless Coffee, what's up? Says, I hear property taxes are horrendous on Long Island. They're more than horrendous. More than horrendous. Especially in places like Oceanside, South Shore, Long Island. I just don't know how these people do it. I mean, it's just not even a good investment, honestly. Oh, look at this crazy crater in the road. I don't even think anybody knows about it. That guy bottomed out his car. It looks like the whole road is gonna cave in. Okay, so Remy says, Tom, this is why we Remy says, this is why we focus on JV development projects, keep owners in their property and maximize their values. Love that. Julie M says, nothing is ethical for the elderly when it comes to their finances. Yeah, I mean, I don't know if that's a sinkhole or something, but it doesn't look good, whatever it is. So we're gonna scurry on out of here before we get swallowed whole. Yeah, I mean, look, I think there's a lot of things that could be done, right? Because, and here's another thing. Because my property taxes went gangbusters. I mean, it almost doubled. Now, that is good. Ooh, another guy bottomed out his car. You guys hear that? I think these people can't see the potholes, so they're bottoming out the car. Look. But I think a lot of local municipalities, oh, so did that guy. Jeez. And that guy. Oh, the NYPD. Yeah, somebody called the NYPD, I think. Oh no, he's just trying to avoid the pothole too. I think a lot of state and local governments are going to be awash with cash. Because think about all the newbies who bought a piece of property in Texas, in places like Florida, where the home values doubled, right? Now, hopefully, a lot of people took that into consideration to say, look, when I buy this house and the former owner of the home was paying, let's say, $2,500 a year in property taxes. Well, now that the value has gone up, next year I'm going to be paying double his taxes. Now, I would assume everybody probably took that into consideration, but maybe it's never good to assume. I think a lot of people are in for a rude awakening. Let's just say that. But then on the other hand, state and local governments are going to be awash with cash. All right, guys, so this is Mott Street. I'm so happy we made it down here because when we make a right on Mott, you're going to see all these beautiful paper lanterns here. Unfortunately, half of them are turned off. But we're going to continue to walk down Mott Street because I think it's still kind of cool to look at, even though maybe there's a little bit of a power outage. But these are all the paper lanterns here that are hung from the shops here in Chinatown. Brad's Brain says, Tom, I plan to rent in Texas for a while. Property tax savings will be one advantage. Yeah, that's true. Now, I think home values are going to come down. All of the leading economic indicators tell us that. Because what happens first is the sales transactions dry up. And we've been having existing home sales data come in, and sales have been decelerating quite rapidly. So I actually think that by this time next year, we are going to be in a very, very different housing market. I think valuations are going to come down, which I think is good. I think it's a good thing. All right, let me give you guys some shots of Chinatown here. Dan Zhang says, Tom, I always don't get why all the bubble tea stores close after 10 p.m. in Chinatown. Yeah, so Dan, I think I was telling you, didn't I tell you I went to the new one over here? It was actually not half bad. It was actually pretty good. I'll take you guys by it. But yeah, I mean, to Dan's point, if you come down to Chinatown, a lot of this stuff closes early. Obviously, as you can tell, it doesn't look like this during the day. Trust me. Tons of people here, tons of cool things to see and do. But yeah, I don't really know why. Now, Koreatown is open really, really late. So if you're looking to go out to eat or get a bubble tea or something like that, you could probably do that all the way up to 11 p.m. Double Eagle says, Tom starts off the stream giving New York City credit for repaving their roads and then shows us the world's largest pothole. I tried to be optimistic, but look, if New York, that's so, oh man, that's so ironic, dude. That's hilarious. Now, maybe the pothole just opened up, but I do have to be honest, New York has been doing better with paving the roads, but I don't know what's going on with that thing. That looks like the world's opening up down there. Well, this street looks kind of cool with all the paper lanterns. Sonia C is here, says, hey, good evening, good to see you. Mr. Bagman says, BlackRock is nervous. Think this type of worry and chatter from the Democratic Party forced the Fed to pivot? I'm not too sure if BlackRock is nervous. Now, did anybody see the environmental rally at BlackRock's headquarters? We always walk past it on the stream. It's also where Evercore is. But I don't know. Maybe, are you referring to the fact that BlackRock owns a lot of single-family homes? Is that sort of what you're referring to? Now, here's what I'll say. I'll make a quick comment on a lot of the single-family home builders. Now, one of the things that we've been seeing with them is a lot of their existing customers are trying to cancel a lot of their contracts on those existing or all those new homes. So I believe it was last quarter, I was on the conference call for Toll Brothers, and the CFO comes on the call. We're gonna make a left here, by the way. So CFO comes on the call and he says that we've been having to spend a lot more money, not for customer acquisition, but to entice and try to persuade existing customers that are already in contract for a home not to back out of the contract. So that could include anything like maybe throwing in a kitchen remodel or throwing in some appliance packages or something like that. And that's because we've essentially had over 100% move-in rates and a lot of people are canceling contracts. So how does that relate to potentially maybe a lot of these private equity firms, big investment firms like BlackRock? Dan Zhang, this is the tea shop, by the way, that I went to, that I wanted to tell you about. This one's pretty good. It is closed, unfortunately, but here's the sort of chatter that I'm hearing on the street, is that some of these single-family home builders are sitting on a lot of inventory that is just about ready, and there's no demand for it. So the problem is, or what they may do, is start to call around to big investment funds and say, hey, I have a cul-de-sac of 200 to 300 homes. I got to move this stuff. I'll sell it to you in a big block sale for maybe pennies on the dollar. Maybe like 75 cents on the dollar, 50 cents on the dollar, 25 cents on the dollar. You sort of understand what I mean. And then, since all of these homes are built in a single community, maybe it'll be easier from the property management side of some of these big PE firms to come in here, do the deal, and then just use them as rentals. And I think that may make a lot of people upset, because think about it like this. If everybody's waiting for a housing crash, what you need for prices to come down materially is inventory. And right now we only have about 3 months of inventory on the market. To find an equilibrium or to be on parity with buyers and sellers, you need about 6 months. So that could account for the inventory problem, but if these single-family home builders just sell those homes to private equity and big hedge funds and they use them as rentals, well, that inventory is not going to see the market. But again, that's just a speculation. I'm not saying that's going to happen. Hey, Jessica and Lisa is here. It says, hey, Tom, what are your thoughts about Nevada housing next year? Do you see it dropping? And thank you so much for the $5 donation. I appreciate it. Well, Nevada has been, I would say Las Vegas, Nevada has always been a very, very boom bust type market. And here's what I sort of mean by that. What I mean by that is if you look back to the last, I would say, housing bubble, I would say 2008, 2009, the major markets that fell the most were the following: Las Vegas, Nevada, Miami, Florida, specific markets in Arizona. And that is because in 2008, very different environment though, but in 2008, a lot of people started to buy second and third homes in these really nice places like Vegas, like Miami. And when they defaulted on their loans, there was a huge flood of inventory and foreclosures on the market, right? So we usually see the Sun Belt having turbocharged price appreciation. We usually see the same thing in like Tampa, Florida, Miami, and also Las Vegas, Nevada. It's always sort of been like that. And I think just to keep it in the simplest layman's terms, and this happens in any market, right? Not necessarily the housing market. You could talk about equities. Usually the assets that appreciate the fastest during the bull cycle, they'll just naturally have a mean reversion trade and correct the most in the bear. Just look at a lot of these high beta growth stocks. Let me just cross here without getting knocked off. Thanks. Just look at a lot of these high beta sort of growth stocks, like the Teladocs that are down 90%, Peloton that's probably going to go out of business, right? And so many of these other SaaS stocks that went up hundreds of percents or thousands of percent during the bull market, all of those tend to correct the most. So it's sort of like the more they go up, the harder they fall. But I think you're going to see a correction across the board. Real quick, this is one of the best places, I think, in Chinatown. Now, one of our moderators, photos from around New York, has confirmed that this is cash only. So if you want to come here, it's on the corner of Bayard Street. Also, if you just type into Google Maps the Manhattan Bridge, this is the entrance to the Manhattan Bridge. Come here. It's called Great New York Noodle Town. It's fantastic, but it is cash only, unfortunately. Yeah, photos from around New York, you're saying, yeah. You know, that's a bummer, man, because I never have cash. Yeah, that's true. So I think Florida has no state income tax. Texas, I think, has no state income tax too, as well as Nevada. Michael Joseph says, okay, so no state income tax in Nevada, which is why people are getting out of California, moving there. Yeah, I mean, you know, I had a couple of friends that used to live in San Francisco. None of them moved to Nevada. They moved to, what's it called? San Diego, California. Supposedly there's a lot more, space there, maybe a little bit more affordable and safer in San Diego as opposed to San Francisco. Yeah, Robert says Tom only carries his Bitcoin wallet. Remy says spent more cash in the Dominican Republic 2 weeks ago than I did in New York all year. Oh, you went to the DR, man. Nice. How was it? Yeah, Dominican Republic supposedly beautiful. Very tropical place. Well, I'll be back in Miami November 1st, please God. I booked my flight. Remy says awesome, lots of development in the DR. Love that. Tariq Khan says, Tom, can you comment on no capital tax states? Basically no tax on your investment realizations. Tariq Khan, I've never even heard of that. Is that a thing? Let me read that again. Tom, can you comment on no capital tax states? Basically no taxes on your investment realization. So you're talking about no cap gains tax? I've never heard of that, honestly. Has anybody else in the chat that maybe has more experience? Anybody's heard of that? I'm interested. Definitely. Now, I mean, the only thing that I could think about is, let's say if you're a business owner, right? And let's say you're like a one-man shop or something like that. If you set up an S corporation, what you could essentially do is put yourself on a payroll. So you could go to like an ADP, or you could go to Paychecks, and you could pay yourself a salary, and then all of the other revenue that you're making, right, just does a pass through to the business. This way you avoid the self-employment tax and you're taxed at a lower rate. Does that make sense? But I've never heard of that cap gains thing. But any tax advice or any tax talk, I'm not a CPA. This is not my wheelhouse. So please do not listen to me with this. Aaron Fraser says, yes, if true. Wonderland explores the states without income tax: Wyoming, Washington, Texas, Tennessee, South Dakota, and Florida, and Alaska. Yeah, I understand that. That's part of one of the reasons why I moved to Florida, but I've never heard the capital gains tax thing. Do you have any, like, a link to something that you could put here? Tariq Khan says New Hampshire will soon become no capital gains tax. I don't even know how that's possible. I mean, I love it. I don't know, those are the only tax strategies that I've deployed before. Is if you're a small business owner, let's say you're doing like $1 million in revenue, right? You're gonna have to pay a hefty self-employment tax on that. So if you just pay yourself a reasonable salary, right? You can't pay yourself $1, right? It has to be ethical. You gotta be, a team player here and pay your taxes. But if you pay yourself a reasonable salary and just let all the other revenue as a pass-through to the business, well, then you're gonna avoid the self-employment tax on that, and it gets taxed at a lower rate. But again, anytime we talk taxes on the stream, I'm not a CPA. This is just basic conversation back and forth. So if you want tax advice, I would talk to an accountant or a CPA. All right, I always like showing this. Check out the awesome architecture on here. Beautiful building. Yeah, Dark Horse's cap gains is federal tax, not state tax. That's why I'm a little bit kludgy on it too. I'm just not sure. I've never heard of it. Deep Value Alex says, what do you think will happen to the housing market where 40% or more were cash transactions were within the last year? Well, I think just overall, right? I think a lot of people calling for a massive, I would say, GFC style moment, great financial crisis style moment. I just don't think it's going to happen because the environment is much different now. In leading up to 2008, and we've talked about this before, the credit quality of these customers or people were just sort of laughable. Oftentimes there was no income verification. Oftentimes they didn't even check if you were employed. No credit check or anything like that. So I think the people who were able to get a mortgage this time around, I'm not going to say all of them, but a lot of them, right, are not a high credit risk, to put it more broadly. I bought an investment property about a year and a couple months ago, and banks were not lending. It was very, very difficult to qualify for a mortgage. And I'm not going to say I'm a wealthy person, but I've run-of-the-mill average Joe, making a good income, have good savings, and they still gave me a hard time, right? And they say, look, we're not going to do the deal unless you put 20% down on your property, which I didn't want to do, by the way, because I was using it as an investment property. So I felt comfortable using a little bit more leverage, but they wouldn't do the deal unless I did 20% down payment. So I did that. Now, look, I think we can get very granular into the data, but I think just a broad-based, I think us as a country, we've learned a lot since the great financial crisis. I think the big banks have learned a lot. I think the underwriting standards have improved materially. And just risk management departments across the board are more, I would say, yeah, I think I've sort of made my point, but I think across the board, broad-based, you may see national housing price declines, which really hasn't happened in a long time. I think you'll see very specific markets that may have a 20% drawdown or something crazy, but I don't think it's going to be like 2008. Now, here's what I will say that you are definitely going to see. And I believe we've mentioned this before. In some markets, I'll give you an example in Miami-Dade. There are some homes that were on the market where it's just not even a real price. It's just a fake price. And what I mean by that is you had a 3-bedroom, 2-bathroom home on the market in like North Miami Beach and Sunny Isles Beach, Florida, and they were asking $680,000. To me, that's not a real price. That's just nonsense. So a lot of that stuff is going to show up in the data. And if that particular home drops 40%, well, what is going to be the big headline on CNBC? Housing prices are falling 40%, but when at the end of the day, it was never going to sell for $680,000, a 3-bedroom, 2-bathroom home in North Miami Beach, okay? So I think a lot of this artificially suppressed rates nonsense that was happening in 2020 and 2021, you had a lot of people that were putting their homes on the market at just wishful prices. Like it just wasn't even a real price. And maybe many of you are seeing that in your neighborhoods too, but yeah, Joan Case is very true. Hey, Mr. McAllister is here. Good to see you. So we are now in Little Italy, everybody. A lot of people out tonight. Tiffany Allen says, Tom, this will be very market and price point specific. Kevin Ramsey says it makes you not want to do anything, to be honest. Hey, Dr. Longus, what's up? Sparks Carnival, that's right. Less disposable income for consumers. Now, we did get some information out of the Federal Reserve. Did anybody see the major credit card data coming out of the Fed? Supposedly, credit card debt has hit an all-time record high in the United States. But here's sort of the good news. And being an optimist, I tend to look for the good news, not really to try to pick and pull data, but Q3 earnings started off with the major financials, with a lot of the investment banks, credit card issuers like Amex, Visa reporting earnings. And one of the things that we noticed about those earnings reports is credit card delinquencies, or I would say the short-term delinquencies, like a 30-day, and a long-term, which would be like a 90-day, hasn't really ticked up materially. And is still below, I would say, pre-pandemic trends. I would say about 2019 and even before. So even though credit card balances are hitting all-time record highs, we're not seeing the defaults and the delinquencies that we need to start to see for there to be a material credit risk. Hey, Aaron is here. It says, got out of debt in 2008 when many predicted what is now happening. Very nice. Joan K, good to see you. Hey, TR7 says Santos FC. Now, I remember when Neymar used to play for Santos FC back in the day, didn't he? Double Eagle says, didn't AXP or American Express indicate in its Q3 earnings that they were increasing its ADA reserves? Yeah, and so that's another thing that I noticed. Across the board, all of the major banks, Bank of America, JP Morgan Chase, Wells Fargo, they all increased their loan reserves. And this is exactly what they did during COVID. Does anybody remember that? And this is another reason why, if you really take a deep dive into the financial reporting of a lot of these investment banks, real quick, this is Ferrara Bakery, by the way. Very, very famous and fantastic bakery here in Little Italy. But in 2021, one of the things that really juiced a lot of these banks' earnings was they were releasing a lot of those reserves. So a lot of the banks set aside a ton of money because they thought that it was going to be a catastrophe with COVID. Everybody had to stay home. They thought there was going to be massive layoffs. So they thought people were going to be defaulting on their debt left and right. So they had to set aside a lot of cash for those potential defaults and delinquencies. Well, the good news is that never really materialized. But to Double Eagle's point, it seems like a lot of those banks and credit card lenders are doing the same thing now by increasing a lot of their reserves. So yeah, it's an interesting thing. I did notice that. Hey, Melee is here. It says, hello, Tom. Good evening, everybody. Good to see you, Melee. Now, if you look all the way in the distance, you'll see the beautiful Empire State Building. Hey, Danila says hello from Brazil. Ryan Beck says, my company is leaving American Express for Citi. I can't imagine that is a good hit for them given the size. Wow. Yeah, definitely not good at all. Did they give a reason for that? But if you guys are enjoying tonight's live stream, enjoying the conversation, feel free to leave a like on the video and hit the subscribe button if you are new. We do these streams roughly 5 days a week between New York City and Miami. And if you want to continue the conversation, if you scan the QR code on the screen, I do write a free investing newsletter where I talk about not only the US equity market, but fixed income, emerging markets, and the like. So if you scan the QR code, punch in your email, you will be signed up to receive it for free. This is a pretty cool photo of Tony Soprano. And also from Goodfellas too.
You see this one?
So way back in the day, when my family came to the United States from Ellis Island, that's the sort of business we were in. We were in the bar business, and during Prohibition, we actually owned some of these speakeasy bars near Times Square. So there's some interesting pictures of my great-grandfather tending bar with some notable people like Jip the Blood coming in. All right, so let's push on up here. We got to go all the way back to 34th Street, Pennsylvania Station. Yeah, Michael Joseph, they did. They said they filmed some episodes in that location in Little Italy. Yeah, you're right. See Unseen says, Tom, thanks for using your native New Yorker street smarts plus John Jay criminal instincts to save the 126-year-old library. I think you deserve the key to the city. You know, I think if I was offered it, I'd take it. I'm not going to say I deserve it, but if I was offered, I'd take the key to the city all day. Appreciate that. Yeah, Western Mass Dave's is fascinating, Tom. A little bit of family history. Yeah, very interesting. So originally my family's from Ozone Park, which is Queens, right across in the neighborhood near John Adams High School. If anybody remembers, anybody familiar there? Yeah, Mike C says Jip the Blood was a great gangster name. Yeah, I think he was the leader of the Lenox Avenue gang here in New York. Is anybody into Egyptian food? Thoughts there? Thumbs up, thumbs down? Well, if you're thinking thumbs up, there's actually a really good Egyptian restaurant to our left. It's called Zuba, Z-O-O-B-A. Let me see if I could show you guys. It may be closed, so maybe the lights are off, but yeah, all the way down there, you'll see it. It's called Zuba. Great food. It's actually the first time I had Egyptian food too.
I live here.
Can we get a quick time check in the chat? I just want to make sure I'm not going to miss the train. I know we started the live stream late too. I was getting hammered at work. Oh, Mohammed says, I'm Egyptian, try, let me see, what does this say? Kosher best Egyptian food. Mohammed, let me take a screenshot of that. So is that a type of dish? Is that what you're talking about? Let me see, hold on. I'm gonna try it. If they have it on the menu, I'll try it. All right, 10:50. All right, we gotta start to pick up the pace a little bit. Wow, viewers from Egypt. Good to see everybody. Oh, Mohammed, it is a dish. I'm gonna try it, I'll try it. Wow, look at everybody outside here with the spring lounge. FDNY is coming up the street. Very narrow, I'm not sure how they're gonna make it. Let's see. Hey, Rocks, I'm from Far Rockaway, Queens. I have friends who went to John Adams High School. Very cool. Rick, awesome. Love that. Oh, your former wife is from Ozone Park. Now, I haven't been to Ozone Park in, my God, I don't know how long, but supposedly it's changed. Just like anything else in this city, it's changed. Yeah, Susan. Oh, I don't think he can make it through. I think he's gonna have to move that guy, or he's gonna get his car scratched. Ooh, yikes. That's a big safety issue, not gonna lie. With these dining things and the cars parked, how's the FDNY gonna get through? Now, okay, picture this, for all the native New Yorkers here, we're going on hour 2, so the stream is allowed to go off the rails. I think we covered a lot today. We covered what we needed to cover. So imagine when it starts to snow and you have the outdoor dining structures here and the cars. Where are you gonna put the snow? This place is gonna be crazy this year because some of these streets down here are extremely narrow. Oh, look at the interior of this restaurant here. Very unique. This is called Local 92, SOHO. And this place is actually pretty good too. This is called Parm, P-A-R-M. They also have a location on the Upper West Side of Manhattan. Julie M is like, so true, Tom called Pete Buttigieg. Maybe. Yeah, isn't he head of all transportation, stuff like that, infrastructure, something? Well, big shout out to the FDNY. This is ladder 20. We have a ton of respect for the FDNY here on the Walks in Wall Street podcast. Ah, Ryan Beck, you're right. Transportation Secretary. Oh, sorry about that. All right, we're gonna have to kick up the, we're gonna have to get in gear here. I may miss my train. War Walker Saddam would make a good fireman. I don't think so. I don't think I have the build to be a fireman. It's a tough job. It's a difficult job. Tiffany Allen, good to see you, as always. Now, I'll quickly read off the key levels we were talking about. We've already reviewed them. But it's interesting to see, obviously looking at a weekly time frame of the major equity indices. Now, you notice we rallied right off of that 200-week moving average, okay, right on the Dow and the S&P. But the NASDAQ is a laggard, and it's strange because usually the NASDAQ leads the S&P and leads the Dow. Just look what the NASDAQ did in 2020, 2018, as well as 2014 and 15 during the taper tantrum. The NASDAQ was actually leading the S&P and the Dow. But this time it's quite the opposite. You have the S&P, well, you have the Dow leading the S&P and the S&P leading the NASDAQ. And the NASDAQ is not even above its 50-day or 200-day. And here's one of the reasons why I think that. Now, the NASDAQ is a very tech-heavy indice. And a lot of these tech stocks, enterprise software stocks, do not perform well in an environment where rates are higher. Now, the S&P 500 also has a pretty high weighting towards financials and energy. And energy and financial stocks have really been outperforming. So I think if you're a person who just dollar cost averages into the S&P 500, well, chances are you're actually doing okay. You're actually doing okay because you have that diversity, right? If you maybe own a lot of the high beta, high growth sort of NASDAQ names, maybe you're not doing so well. But it's sort of like as mega cap tech has fallen off, oil companies have taken over, energy in general. Also, financials have been doing okay. So it's just an interesting dichotomy we see here. This is a fantastic coffee shop, by the way. Gasoline Alley Coffee, one of my favorites here in NoHo. I'll quickly show you guys the inside. It has literally has a bicycle attached to the ceiling there. Sabrina Fair is joining us. What's up, Sabrina Fair? And that sort of ties back into the theme of the night, is that in every single new bull cycle, you really want new leadership, okay? There's studies that have been done that says the main leaders, or I call them true market leaders, of former bull cycles, very, very seldom, that dog is beautiful, by the way, this white dog right here to the right, very seldom do those former true market leaders go on to lead in the next bull cycle. And this is why I've been running a lot of screens and scanning for stocks that are near their 52-week highs. And it seems as if right now, the particular, I would say, the sector that is leading is a lot of the healthcare and biotech stocks, which I'm actually not too excited about because I am horrible at trading biotech and healthcare. Well, biotech mostly because for reasons we talked about before, a lot of these companies are very, very dependent on FDA approvals and having their clinical trials go well. So it only takes, if you only have one drug in the pipeline at a biotech and your drug doesn't get approved, well, you don't have a business anymore. And that stock can drop like a rock overnight. So, you know, watch out for this new leadership, right? For everybody that's trying to buy the bottom and knife catch Meta and Amazon, you know, if history is a guide, there's no guarantee that those stocks will ever recover. What I would encourage you guys to do this weekend when you're doing your deep dive, go back, and Yahoo Finance is actually a pretty good resource for this. You can go back and pull the data from the top stocks in the S&P 500 going back 50 years. And I want you to notice, are there the same top 10 stocks in the S&P today as there were in the early 2000s and even the 90s? No, it's completely different. So who's to say Meta doesn't lose its spot in the S&P? Now, I'm not saying that's going to happen, but maybe. You never know. You never know. So look for new leadership and make sure you're not just trying to bottom fish in some of these old names. Now, somebody, I forget who it was in the chat, but I'm going to give you the comment of the night. But I just forget who it was, but we'll give them comment of the night. They were talking about the life cycle of a company. And if you're talking valuation, so let's just talk on a PE basis, on a price earnings basis. Now, a company has its life cycle. Let me just cross without getting flattened by this taxi cab. So companies, man, it seems like every single car is honking, clanging, banging. Jeez. It seems like every company, what you'll have is when it's in early stages of its growth, right? Maybe it's growing at a 25% CAGR, something like that. Maybe a 50% CAGR as it relates to its compounded annualized growth rate. You know, it's probably going to trade at a ridiculously high price to earnings, like a PE of maybe in the hundreds, right? But as that stock transitions away from compounding out its sales and revenues at, let's say, 30%, and maybe it's only single-digit revenue growth, well, you're going to see those PEs contract, and the PE, it'll probably trade at a 10 PE, and maybe 8 or a 9. But at one point, a lot of those stocks were these turbocharged growth stocks that traded at, 120 price to earnings, ridiculous multiples price to sales. And I think what the market is doing now is, number one, discounting these stocks because of higher interest rates. But number two, a lot of these big mega cap tech stocks, I would say with the exception of Apple maybe, and Microsoft, I think you're gonna see a change in the dynamic of the valuation metric. Should this be valued as a growth stock, or should this be valued as a very mature company? So just keep that in mind, because if you're investing in the individual stocks and you're trying to bottom fish some of these companies that have been really beat up, how much could you really make on that, right? What's your risk reward? Are you sort of running those numbers? So maybe just be cognizant of that. That's really the only thoughts that I had for tonight. But team, I do want to say one thing, because we are coming up towards the end of the podcast, the live stream. Now, the reason why I've been saying podcast lately is because in almost every single email I get, a lot of viewers have been saying, "Hey, Tom, I love the podcast. Here's some of my thoughts on this and that." So I don't know, if you guys want to call it a podcast, we can. Maybe it doesn't matter. But we're coming up to Astor Place. And I believe this is where Meta has one of their main offices. And did anybody notice on Meta's earnings report, they were talking about added, or I would say increased capital expenditures from consolidating a lot of their lease agreements. So it seems as if a lot of these big tech companies are trying to get out of a lot of their real estate expansion. I think Meta actually may be in this building right here, above where the Wegmans is gonna be. So we're gonna talk about this next week. Is commercial real estate in for a massive bear market? Now notice how I said, like office buildings, things like that, not so much single family or multifamily real estate. I think a lot of office buildings could be in for, let's just say, a little bit of a hurt here, because one of the things I've been noticing from a lot of these big tech companies' earnings calls is consolidating lease agreements, either breaking their lease agreements or even trying to sublet their existing space, trying to downsize it. I think that's all due to COVID. Obviously, if you're a big tech company, you employ a lot of software engineers. Well, chances are a lot of your workforce can probably work remote. So we'll talk about that on Monday. I have some very interesting data for you guys that we are going to do a deep dive with. But I think I'll leave you guys off with this. This is 51 Astor Place. This is the IBM Watson building. But yes, Forever 18. This is casinos, hotels, hospital, mall operations. I'm actually surprisingly bullish on hotels. But malls, yes, I agree with you on that one, for sure. Let me check my battery level. All right, we are on 4%, so I do have to wrap it up. Remy says, Tom, off. We moved into a co-working space, although more expensive. It's far more flexible. Hey, very nice. Yeah, I've actually been surprisingly bullish on the WeWork model. I think the pandemic inadvertently saved WeWork. But everybody, I do have to go. I want to wish everybody a very, very happy weekend. And I want to say thank you so much for coming out and joining us on another episode of Walks on Wall Street. So have a fantastic weekend. I'll see you guys tomorrow, 8:30. We'll probably be streaming live from Brooklyn. We'll see you then. Be safe and have a great weekend. If you want to sign up for our free newsletter, you can scan the QR code on your screen. And we will see you all in the next one. So Tiffany Allen, Sunshine After Rain, Golden's Dawn, Yes Forever 18, Aaron Frazier, Muhammad, Mike, GX72, ATC, Remy, thank you so much, my friend. Christy F. If you're new here, hit the subscribe button, and we will see you in the next one. Enjoy.